Hey, good afternoon. It is Tuesday at 1 o'clock. I'm going to shoot this real quick before we head out. And as discussed, we won't have live market chat tomorrow, and we'll be out the rest of the week. We will pick things back up on our regular schedule next week. I may shoot a video Monday just to kind of bring everybody up to speed. But here's what we expect. I expect the report tomorrow to create a lot of volatility. I expect it to move both directions, to be honest. I think that the report will be front and center for a few hours, and then I think we're going to go back to trading what we know are the current fundamentals, which are that the South American crop is sketchy at best and probably declining, that the food demand in the world has not declined, that our drought here in the U.S. is not getting any better, and our supply is really tight. So I think we're going to continue to see strength unless something just shocks the market and pushes us to the side. So we'll run through the technicals here real quick. Again, you got to take the technicals today with a grain of salt and tomorrow, because we just don't know how the market's going to react to things. I mean, the USDA can come out and say, oh, exports are zero, yield was bigger than we thought it was, and the South American crop is perfect. And the market's going to react really bearishly to that, right? I don't think they're going to come out and say exports are perfect, domestic demand is strong, and Brazil is junk. Yeah, I don't think they're going to do that either, because the market would respond too rapidly to that. So I think they're going to do what the USDA normally does and be pretty conservative and not throw a whole lot of curveballs at people in January. So with these technicals, again, we'll see exactly how they react and how solid they are, but you got to take them with a grain of salt. But if we were to look at this chart today and just say at the end of Tuesday, what do we see? And what we are seeing is a doji bar, a reversal bar, where you have all of these lower shadows, okay? You've got anything under 1280, the market has just been rejecting, and we keep pushing up into this $14 mark, right? So everything on this particular chart is clean and nice, and we should be pushing higher up to above 1440 sooner rather than later. And you can come all the way down to this 1334 mark and still have that be intact, okay? And that's just in this one portion. So I think that we're headed much higher and going to come challenge these prior highs on the March contract up at 1440. And I wouldn't be a bit surprised to see us up around 15 bucks. And I think that's going to be the case until something materializes that convinces this market that supply is not an issue in South America. I'm not saying we're going to 20 bucks, but I think that this setup warrants a challenge of these old highs, and probably something more significant than that over time. You know, if we look at the weekly chart, let me pull up the weekly here. If we look at the continuous weekly chart, this looks really good here too, right? You got a nice move up. We're coming right up into this zone of resistance here. So that 1440 mark is right here at the top of that. I think that's where we're going to come challenge. And you got to watch it, because if we break it, then we're coming all the way up, at least to that high at 1623. So I think the market's in a really important stage right here, and anything above about 1325 would hold that position to be valid. So if we take out this 1325 level, then we'll just have to reevaluate and look at what the fundamentals are at that time. But for now, we're going to look higher, and I think you should as well. Okay, so for March corn, let me zoom this in just a little, or zoom this out just a little bit so you can see the peak. Here's the summer high at 640, and here's where we're trading so far. We've been holding this 590 shelf, which would be built off of all of this this stuff right in here, right? All the way back from the beginning of November all the way through December. It's been holding above this 592 level, with the exception of this little move right here. I think as long as we hold that, we're working higher. Clearly, we are market's undecided about the $6 mark, whether it needs to move up or lower. The idea that we're going to break 6 and come all the way down to like 5 or 480 and come all the way down underneath this stuff, I think is just really low risk. I don't think that the fundamentals are there to warrant that yet, because we just don't have the new supply in order to make that a reality. Some things that could push that would be the ethanol margin eroding. That would mean oil and gasoline starts to implode. Maybe the acreage number gets in South America gets bigger and the yield gets bigger. I don't know. Something like that is what it's going to take for us to push significantly lower all the way down into here, I think. So anything above 590 we really like, and I think much higher is in order, probably somewhere up in the $6.80 to $7 range, given what we're seeing in the South American continent and in the demand side of things. Let's see if the weekly chart supports that as well. Here's our weekly corn chart, and here we go. We're right inside the cloud. You guys know that if we break out of this cloud, whether that's up here or we break up into it over here, that the average move is close to $2 a bushel when you come out of the top of a weekly cloud. And I don't see any reason that that would be negated on this particular move, given everything that we've been looking at. So I think a challenge up out of it is warranted, and we could easily exceed these highs if we run into any sort of weather issue at all. So we're going to keep looking higher. We're going to keep being really, really patient, and we're going to keep looking for the nearby corn contracts to invert against the deferreds, because the world needs the supply and we need it front and center as quickly as we can. As far as the new crop corn and bean spread, we're sitting right at 2.3, which is about neutral. So the market is undecided on whether beans need to gain on corn or whether corn's got to go buy acres. So I think we're just getting ready to start all the fireworks for new crop, and I think long is the place to go. I'm just not sure which, corn or beans, is going to outpace the other. But I think for the next 90 days, we got to be looking higher in those markets as well. And let's look at wheat. Wheat had a really, really ugly couple of weeks here. It just got the tar beat out of it. There was really no fundamental reason for this. We haven't grown any more of it. We're still really tight. We definitely have not cured our drought situation in the spring wheat areas, and the drought in Kansas has not been busted either, even though we did get some nice moisture. But we ran into rejection right at the bottom of this channel, just like we kind of thought we would, and we seem to be reversing from it and popping back up into here. I have no idea what the report's going to say about wheat tomorrow. A lot of people expect lower acreage. I think it just goes with corn. I think that if corn breaks, wheat probably is going to get a little bit weaker, and if corn starts to take off and rally like we think it will, then I think wheat's got to ultimately blow up and come into new highs as well. So we really like wheat here. Really like the way it's been trading, and if there weren't a report tomorrow, we'd be jumping all over this and wanting to buy it. We've overcome these two lows right back here. We've bounced off the lower end of this channel. We've completed a wave 4, and we should be moving back higher in short order. But with the report tomorrow, you just don't know what they're going to say. So we're going to look higher. We're not going to take a ton of risk, but I think anything above this 725 to 775 level, that's really strong support on that chart, and I just don't see it getting busted, at least with the fundamentals as we know it today, and that can change tomorrow. So in conclusion, we're going to sit tight. We're not going to over trade it. We're not going to over analyze it, and you got to just let it do its thing and recognize we got a lot of time left before we know which direction things are going to end higher, or before we know where things are going to actually end up. So that's 10 minutes. I hope you guys have a great rest of the week. We'll be in touch if something dramatic happens, but otherwise we'll be out for the next 3 days and back at it next week, back in the office at least. Remember, there is significant risk when you're trading futures and options, and you should only do so in light of your own financial condition. If you're going to be trading, please talk with a professional and make sure that you are understanding exactly what position that you're getting in. Hope you guys have a great week. We will talk to you Monday.